All right, everybody, welcome on November 4th. This is where we started last week on a monthly chart of the S&P 500. And again, just to refresh a little bit, we talked about this trend line where we were just touching the underbelly of the trend line at the end of October last week. And then this week, we finished lower for the first time basically in 5 weeks. I think all of October every week was up. But in any event, our thinking is exactly the same. Now we remain still in that trading range, basically between 1200 and 1300. If we were to get above 1290, certainly that would be a good sign for the bulls, a bad sign for the bears. Let's look at this on a daily chart, see what it looks like. So above 1290 would be good. I believe if we were to take out 1228, 1230, to me that would increase the odds that we're going to 1200. And like anything else, we're only going to hit 1200 so many times, and we're going to break through it to the downside. And just the opposite, we're only going to hit 1290, 1300 so many times, and we're going to break through it to the upside. So I'd feel comfortable either adding or with new money above 1290, a close above 1290 as opposed to intraday. And as it stands right now, we have not added or reduced our long position since the 10th of October, and that would be the Vanguard Total Market Index. Let's take a look at that on a weekly chart, or actually on a daily chart. Here's the VTI here. We talked about different gaps being filled. In this instance, we would want to see 62 hold. If we were to break 62 on a close, we would probably increase the hedge. And then we would look to get out if we broke the 50-day moving average, or release the long position and let the short hedge run. As far as gold goes, we did put up a still chart yesterday. We said yesterday that if we were to close in the black today, we would take half that position off. That still stands. And the reason for that are the gaps here, and obviously the overhead resistance at around 172, 174 in that range. If this stops going up, right now we do have a hard stop at 164.07. I'll have to look at this weekend to see if we would move that hard stop up or not, in the event that we didn't get any higher than the high that was put in yesterday on Thursday. And that high intraday was 172.04. Again, if we get up and fill this upper gap here, we'll take half off, and then we'll move the balance above 164.07. We're staying away from bonds for now. Let's take a look at TLT. And the reason for that is this chart really go either way. Obviously, everything, again, is on the EU news, which will be out today, I believe, at 3 o'clock our time. It's around 2:30 right now when I'm recording this. But in any event, there's some gaps here that could be filled to the downside, but we are above the 50-day moving average. So we're just going to see how this plays out for a little bit. We're not short or long bonds. All right, you guys, that's it. The overall trend is long since the 10th of October. And again, we'll finish up here looking at a chart of the S&P 500 cash. Above 1290 is good. Below 1228, we're going to be concerned. We'll see you next week. Thanks again, Doug McKay, antiwallstreetguy.com, on the 4th of November, 2011.